Hello, welcome to the European Open briefing for Tuesday, February the 14th. I'm Rafi Boyajian, currency analyst at xm.com, and we're going to be looking at what's happening in the currency markets today. So we have a bit of a slight risk of sentiment this morning, and the dollar is slightly down against the Japanese yen, and that's following the resignation of the US National Security Advisor. And it comes after allegations that the National Security Advisor was working with having discussions with the Russian ambassador prior to Trump taking office, and that's created a bit of uncertainty and anxiety in the markets. The main attention, though, for today is Fed Chair Janet Yellen's semi-annual testimony in Congress, and investors will be closely scrutinizing her testimony to see whether or not a March rate hike is on the table. The main mover this morning in terms of other currencies is the Australian dollar. It's up 0.5% against its US counterpart, following some very strong business confidence data. In China we had some inflation data which showed consumer prices rising to near 3-year highs, and that helped. That did actually help risk sentiment a little bit. The Chinese yuan is also firmer because it suggests that we are seeing a stronger demand, domestic demand from China. And in commodities, oil prices are down despite an OPEC report yesterday showing that the compliance for that output deal we had last year is pretty good at 93%. So let's begin with the dollar-yen pair. That we can see the dollar is down. Yesterday it briefly touched 114 yen. It's currently trading at 113.60 yen. It comes after the US National Security Advisor Michael Flynn, who's a close ally of Donald Trump. He was forced to resign after illegally having discussions with the Russian ambassador on lifting Russian sanctions before Trump actually took office. So that's created a bit of uncertainty and anxiety in financial markets. But the main focus for today, though, will be what Janet Yellen will say later in Congress. The testimony is due to start at 15 hours GMT, and traders will be looking to see whether or not she will signal a March rate hike. As we know, back in December, the Fed projected 3 rate hikes for 2017. So markets will be looking to see whether or not the Fed chair will maintain that slightly hawkish stance, or whether or not Yellen will sound cautious once again, as she usually does. We did have some slightly hawkish comments, though, from the Dallas Fed President Robert Kaplan. He said that moving sooner rather than later is what the Fed should be doing in order to maintain that the gradual pace of rate increases, and not to have to sharply raise rates at a much later date. We had some very good Chinese inflation data. Although inflation is going up, it's not really, this is seen as healthy inflation. Consumer prices rose at an annual rate of 2.5% in January, beating expectations of 2.4%, and this is up from 2.1% in December. Prices were pushed higher from higher food and transportation prices. Producer prices were also strong. They rose to a 6-year high of 6.9% versus estimates of 6.3%. And we saw higher commodity and raw material prices pushing up those input costs in China. And this is seen as positive by the markets because it reinforces the outlook that domestic demand is on the up in China, which is overall positive for the global economy. And the yuan is firmer today although it actually started the day down against the US dollar, it later rose to around 6.86 per yuan just at the start of the European Open. If you look at the Australian dollar, that's up over 0.5% this morning against its US counterpart. We had the NAB business survey data out this morning. It showed the business conditions index rising to a 9.5-year high in January, and the business confidence index hit a 2-year high. And that supports the Reserve Bank of Australia's recent assessment that that third quarter contraction we had in the Australian GDP was temporary, and the Australian economy is bouncing back rather strongly. We already had some data suggesting fourth quarter growth did bounce back. We had very strong trade data, and it looks like the 2017 also got off to a positive start, and that should help the Australian dollar higher over the coming months, although the stronger US dollar could possibly refrain the Aussie from making very strong gains. If we move on to oil prices now, we can see oil prices fell yesterday. This comes despite the OPEC report which gave us an update on how the OPEC members are progressing with their production quotas for January. Output fell during the month by 890,000 barrels per day, and this suggests there was 93% compliance by OPEC countries, the 11 OPEC countries taking part in that deal that was agreed in November last year. So this should have been positive for oil prices, but oil prices have come under pressure on increasing signs that US output is continuing to rise this year, plus also the fact that we already had a very large supply glut to begin with. So many analysts are doubtful whether this the size of the cut agreed by OPEC and non-OPEC countries will be enough to push up prices significantly, and that's been pretty much the trend over the since December, where prices have been consolidating in a tight range, and it's currently US crude is currently trading just above $53 a barrel. If you look at today's economic calendar, it's a very busy day. We can see here we already had that Chinese inflation data. We had the German flash GDP figures out. It was slightly weaker than expected for the fourth quarter at 0.4% versus expectations of 0.5%. So that will be seen as slightly disappointing, as there were hopes that the German economy would bounce back more strongly towards the end of last year. We also had the final inflation figures, which was confirmed at 1.9%. Although that is slightly positive, though, as it suggests that if the fact that consumer prices in Germany are going up, it's seen as a positive sign for the overall outlook for the German economy. If you look at what's coming up later in the day, we've got UK inflation coming up shortly, also the German's EU Economic Sentiment Index. We're also going to have the Eurozone GDP flash estimates for the fourth quarter, plus industrial production figures. In the US session, it's going to be a little bit quieter. We're just going to have the producer price index, so Yellen will likely dominate the headlines later in US trading. That's it from me. Thank you very much for watching, and have a great day.